When an investor purchases dividend stocks, they are entitled to a periodic distribution of a predetermined percentage of the company's accumulated profits. Most American dividend stocks distribute a certain amount to shareholders every quarter, and the greatest of them increase their dividends over time, providing investors with a growing stream of passive income. Here are 5 dividend stocks to buy now. Number 5. Big 5 Athletic Goods Corporation. It is a retailer that specializes in athletic goods, and its headquarters are located in the state of California. The company's 433 locations may be found in 11 different states. In addition, the company is a retailer of athletic apparel, footwear, and a variety of other items and accessories related to sports. At the conclusion of the first quarter of 2022, Big 5 Sporting Goods Corporation reported having more than $62 million in cash and cash equivalents on hand, while its total assets amounted to about $400 million. The company made the decision in March to launch a brand new share repurchase program with the objective of purchasing up to $25 million worth of the company's ordinary shares during the program's lifetime. The Big 5 Sporting Goods Corporation now distributes a quarterly dividend to its shareholders in the amount of 25 cents per share. In May 2021, the firm intends to raise this distribution by 20%. In addition, the company presented its owners with not one, but 2 distinct opportunities to receive special dividends in the year 2021. As of the beginning of July, it was determined that the dividend yield on the stock was 7.9%. At the end of the first quarter of 2022, 12 hedge funds held ownership in the Big 5 Sporting Goods Corporation. This is a reduction from the 14 funds that held ownership stakes in the business at the beginning of the previous quarter. The aggregate value of these interests is greater than $21,400,000 at the present time. Out of all the other hedge funds, one of these hedge funds held the most significant investment in the company, which was estimated to be worth $5.5 million. Number 4. Pioneer Natural Resources Company. The Pioneer Natural Resources Company is an energy company with headquarters in the United States that is actively engaged in the search for fossil fuels such as oil, gas, and other hydrocarbons. The Pioneer Natural Resources Company generated $2.3 billion in free cash flow during the first quarter of 2022, and it distributed $900 million, or 90% of that amount, to its stockholders. At that point in time, the cash flow generated by the company's operational activities amounted to $2.6 billion. It repurchased shares with an aggregate value of $250 million during the first quarter, paying an average price per share of $237. The Pioneer Natural Resources Company declared that it would begin dispersing a base plus variable dividend to shareholders at the rate of $7.38 per share on a quarterly basis. In addition, the company paid out an exceptional dividend to its shareholders in the sum of $3.02 per share as a one-time only payment in the month of November 2021. The dividend yield on the stock was 7.92% as of the month of July. As a direct result of the situation in Ukraine, MKM Partners started covering Pioneer Natural Resources Company in July with a buy rating and a price target of $264. They stated that they expect the stock to reach that price. They did this because they believed that the cost of oil would keep going up, which led to their decision. The number of hedge funds that were tracked by Insider Monkey that had ownership stakes in Pioneer Natural Resources Company increased to 54 during the first quarter of 2022, up from 43 during the previous quarter. This is an increase of 11 percentage points from last year. The entire value of these stakes amounts to more than $1 billion at this point in time. In spite of the increased level of competition in the robust energy market, Pioneer Natural Resources had a prosperous year. Pioneer has recently differentiated itself by pledging to return a vast majority of free cash flow to share owners in the form of dividends and stock buybacks. This commitment has been made. In addition, the firm indicated that it would discontinue its use of hedging instruments in order to increase the potential earnings and dividends that may be distributed to shareholders in the event that the price of oil and gas continue to increase. Number 3. Realty Income Corporation. Triple net lease real estate investment trusts look to this corporation as the model of excellence. To begin, a triple net lease is a type of real estate lease arrangement in which the tenant or lessee is responsible for paying all of the continuing expenses of the property. In this type of lease, the landlord does not pay any of these costs. The real estate investment trusts serves as a leading indicator in one of the commercial real estate industry's subfields that has historically shown the greatest degree of stability. In addition, Realty Income is the owner of more than 6,700 properties, the majority of which are leased to businesses in the retail sector. This accounts for over 80% of the total holdings in the portfolio. In addition to this, an investment grade rating has been assigned to the company's balance sheet. This indicates that the company is able to gain access to more affordable debt financing, which, in turn, will give the company a reduced cost of loan capital. Moving on, Realty Income provides a monthly dividend to those who have invested in the company. In specific terms, the company's dividend yield for the past year was 4.01%. The corporation announced the payment of the 625th straight common stock monthly dividend just the previous month. In more specific terms, the amount of the dividend will be 0.2475 cents per share, which works out to a yearly value of $2.97 for each share. Number 2. United Parcel Services. It is a provider of solutions for worldwide supply chain management in addition to being a corporation that delivers packages. The United States Domestic Package and the International Package are two of its segments. The U.S. Domestic Package segment, as its name suggests, provides delivery services for smaller packages within the United States. Additionally, this business provides a range of domestic guaranteed air and ground package transportation services within the United States. Throughout the meantime, its international package sector is comprised of its small package operations in Europe, Asia-Pacific, Canada, Latin America, and the Indian subcontinent, as well as the Middle East and Africa. The results of UPS's earnings for the second quarter of 2022 were reported in July. In more specific terms, UPS reported earnings of $3.29 per share for the quarter on revenue of $24.8 billion overall. On revenue of $24.6 billion, the consensus forecast for earnings on Wall Street was $3.14 per share. In addition, the revenue rose by 5.7% when compared to the previous year's total. Following that, the business stated that it is maintaining its sales forecast for 2022 at about $102 billion. In August, UPS made public its intention to maintain its quarterly dividend payment of $1.52 per share. Since the year 1999, when UPS first began trading on the stock market, the firm has adhered to one of its guiding principles and been a reliable indicator of its ability to generate profits by ensuring that its dividend is either stable or grows annually. This is essential information for investors to have for any long-term investment that is driven by dividends. Does this make UPS a top dividend stock that you should continue to keep an eye on at the moment? Number 1. Philip Morris International. Philip Morris International comes in last, but certainly not last in importance. Manufacturing cigarettes and tobacco on a global scale, Philip Morris International is a transnational corporation. The products of the corporation are exported to more than 180 countries around the world. Marlboro is both the company's most famous and most successful product. In spite of the fact that Philip Morris is best known for its cigarette products, the company is currently in the process of revolutionizing the tobacco industry with the intention of bringing about a smoke-free future and ultimately substituting smoke-free products for cigarettes for the benefit of adults. Philip Morris focuses on satisfying both the desires of its customers as well as the stringent standards imposed by regulatory authorities by utilizing the diverse talents in product creation and its state-of-the-art facilities. The dividend yield that the corporation currently possesses is 5.1%. In July, Philip Morris International reported earnings that were higher than expected for the second quarter of 2022. According to the reports, the corporation generated sales of $20.4 billion and reported a profitability of $1.48 per share. The average earnings forecast was $1.24 per share, and the sales forecast was $6.7 billion. Philip Morris stated that it anticipates its profits per share to range between $5.90 and $6.05 in 2022. To put this into perspective, the company had previously projected profits per share between $5.45 and $5.56. What did you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.